Hi, let me ask you a simple question. If you open your investment app today and saw that the Nigerian stock market had fallen for 5 straight trading sessions, will you panic? Will you start selling everything, or will you just close the app and pretend you never saw anything? Because honestly, I know some people will choose option number three. But let's talk about what actually happened in the Nigerian stock market on Monday, August 17, 2026. Because there are some very interesting things hiding inside these numbers. And don't worry, I'm not going to bombard you with complicated financial grammar. Let's break it down together. Welcome to Madap TV, where we talk about money, business, market, and economy without making you feel like you've accidentally entered an economics examination or class. So the Nigerian stock market fell again. So according to the market figure for Monday, August 17, the NXG All Share Index closed at 242,454.66. So there was a decline of about 0.07% from the previous session. Somebody might look at that number and say, is that even a fall? Yes, it is so. But here's where it gets more interesting. This was reportedly the 5th consecutive trading session in which the Nigerian equity market extended its bearish run. And that bearish means when something comes down. So, and the market capitalization fell from about 156.62 trillion to 156.52 trillion. That is approximately 106.24 billion wiped off the market capitalization in that session. Now, before somebody starts shouting about 106 billion, everybody has lost 106 billion. Hold on, that is not it. That is not exactly what that means. What it means is that market capitalization is basically the total market value assigned to the share of companies listed on the exchange. So when prices move down, the overall market value can also fall. It doesn't mean maybe the 106 billion in cash physically disappear from people's bank or maybe from houses or anything. Nobody entered the stock exchange with a giant vacuum cleaner and suck up maybe the model. No. It is about the change in the market value of the listed shares, and that is an important distinction. But here's where it gets interesting. Now look at the pictures above, because why the overall market was falling. Not every stock was falling.